Thank you very much for coming along this evening. My name's Darren Cooper and I'm the CEO of Blackburn Group, and it's great to see so many of you turn out this evening for our special presentation with, of course, our very special speaker this evening, Dr. Chris Caton from BT Group.
Well, thank you, and let me say it is a pleasure to be here. I come to Perth, I guess, well, 3 or 4 times a year, and it seems at some stage when I'm here, I always finish up in this room. Yeah, I'm the Chief Economist at BT, and before that I was the Chief Economist at Bankers Trust. You don't have to be too smart to figure out that's actually sort of the same thing with a name change along the way. And when you consider that, on the 8th of July this year, I will bring up my 25th anniversary as BT's Chief Economist. In summary then, interest rates were cut to shreds during the GFC. And in 2010 or 2011, so many countries, the Eurozone, Canada, Australia, New Zealand, all kind of said, okay, well, we've got to get back to normal one day. So there were a lot of interest rate rises around the world in 2010-11. A lot. Every country that raised rates then had to give up and go back. And I think that's going to be a story for a long time. Interest rates are going to remain low for a long time yet. We'll always worry about China, and we shouldn't worry about its share market. It's a casino. It turns out we don't worry about it so much these days. Growth will be moderate, desperately seeking a boom in mining, desperately seeking growth in non-mining capex. The cash rate's on hold. I had this in here on Monday. Turned out not to be true, but as of Wednesday, I think it's true again. The exchange rates are again above fair value, so maybe, well, I'm not surprised by the downward pressure we've seen.
Please make welcome our second speaker for the evening, Paul Blackburn. Paul is the founder and managing director of the Blackburn Group, one of the largest private property companies in Australia.
I think there's a real mismatch between the perception of what's going out there in WA, particularly in the national media, and the reality of what we're seeing. My job as the owner and managing director of a board meeting every month, we're like a bit of economists. We're trying to work out where things are going, what's the strategy, and we're seeing such a mismatch between what people think's going on and what is going on. So we're investing. We're investing in Perth, apartments, pretty much everything I do and have, I'm investing in the Perth apartment market. So I'm trying to tell you, not everything, but a majority of our investments are going into the long term of the Perth apartment market, and I'll tell you why. This is a really interesting one. If you look at apartments, here is the brown. People say there's an oversupply of apartments in Perth, and we look at this, 18% of new approvals in WA of apartments of property have been apartments. 71% of new approvals have been houses. In Melbourne and Sydney, of apartments, it's 43% in Melbourne, 58% of new approvals are of apartments in Sydney, and 48% in Brisbane. So to me, that says there's no looming oversupply. We look at that and think, if anything, that's an undersupply story. Population growth, 5 years ago with this huge influx of people in WA is about 60 to 80,000 a year. And you see these sensationalist headlines saying population growth is halved in WA. Well, it went down to say 40,000 a year. That's nearly 1,000 people a week, growth. Now, this year, we're looking at the stats. It might be not a lot, it might be zero or slightly negative for a year. But the average, according to the ABS, is that our population will grow at about 45,000 people a year. So if you just say 25% of those people want apartments, and there's 2 people per apartment, that says to me you can do new apartments just from new migration of about 5,200 a year. Just from new migration. Rough numbers. There's actually 1.8 people average per apartment, but if you said 2, it works out, these are really rough figures, but roughly that as a long-term average. That just counts new population growth. 15% of people in Perth currently live in apartments. In Melbourne and Sydney, it's 30%. As cities get from 2 million to 3 million, traffic, urban sprawl, all those sort of things, there tends to be more of a driver towards wanting to live in and around and close to the city and close to nodes and in apartments. Apartment living gets more and more popular as any city grows. Perth is on track to deliver 3,000 apartments in 2016, 4,000 in 2017. To me, that's an undersupply. You've seen sensational headlines going, oh my God, in the next 2 years, there's 7,000 new apartments hitting the market in Perth. I look at it and go, geez, that's not much. So there's a real mismatch. Now, I might be too positive, but the media is certainly too negative. So I think the truth could be somewhere in the middle there, at the very least.